Hi, everybody. Eric Templeton here with the Marititle, back with another week of stats and what's going on in the local real estate market. So these numbers are from the week that just ended on May 2nd. We'll take a look at what happened last week and what's happened the last 4 weeks on average and how those compare with what happened at the same period of time from 2019. So we can get an idea of what's going on in the real estate market and any effects the COVID-19 and stay-at-home order are having, and just to try to give us an idea of what we can expect going forward. So I did this last week in kind of a long video to try to explain everything. This week I'm going to go through it a little bit quicker. So if you want the full thing, you can go back and find last week's inventory to get a better idea of where the data is coming from. But these are residential listings that we're analyzing on a week-by-week basis and just looking at the status and the dates that they hit those statuses to come up with some conclusions. So what we see this week, in general, each of our numbers is, I will say, worse than it was a year ago when you're looking at week 18 of 2020 versus week 18 of 2019. So we had fewer listings, fewer deals went under contract, fewer units sold, terminations were up, our inventory was down from where it was a year ago, and we had more price reductions. So in varying degrees, everything was off from where it was. And that goes for the 4-week averages as well. This is a more normalized number when you're looking at 4-week averages. Gives you a better idea of kind of how we're trending, and we'll see that in the graphs down the report. So looking at new listings, 25% off for the week at 187 listings, and we're about 25% off when you're looking at that 4-week average compared to last year at 170. So we added 187 to the inventory. This number, 195 going under contract, you'll see in a minute just how exciting it is, but it's really good to see that it's only 3% off from where we were a year ago. So those things that got accepted offers and got put into the WVMLS as either active under contract, active bumpable, or straight depending, the first one of those statuses that hits, that's the date that I use. So we had 195 go under contract last week compared to 153, which is what we've averaged for the last 4 weeks. So we're doing better there, and we're almost doing what we did last year at this time. Sold units at 145, that's 22% off the pace from last year. 141 we've averaged, so it's a little bit better than what we've averaged over the last 4 months, or 4 weeks, excuse me, but about, pretty close to the same number, which is 22% off for the week and 8% off for the 4-week period. Terminations are up. No matter how you slice it, 67 is a big number. That includes withdrawals and expireds as well as terminations. So more listings are dropping off without being sold. You might expect that with everything that's going on right now, that people might want to wait for calmer times. Our current inventory is just under 2,000, which is 20%. It's about what it's been hovering at for the last 4 weeks and about 20% off of last year. And if you recall, if you watched this last week or looked at their report, I included preview status listings last week, and I took those out because that was causing some trouble with the listing dates. So if it was in preview status, it would have a listing date of when it went preview status, and then when it went live, that listing date would change. And so we were double counting listings. So I'm trying to get this short up so I make sure I'm giving you as accurate information as possible. So that's a little bit lower than it was, but that's just because the preview status ones are gone. Price reductions, again, pretty high number. So 94 price reductions in the week, which is way more than it was a year ago for this week. And we are way up from the 4-week average as well. So that's the highlighted numbers. If we look at the graphs, and you're gonna wanna stick around for this one because that's a good number. So we look at our listings and our sold. We know we're down on both. So as you look at these graphs, this is what happened this week. And this is what's happened for the 4-week average. Looks a little bit more normalized and easier to look at. And then this is each of these weeks relative to the year before. So if it's above this black line, we did better than the year before. If it's below it, we didn't do as well as the year before. We had fewer. So with listings, we know we're 25% down. Sold units, 22% down. That's these numbers right here. And this is where we actually were compared to where we were a year ago and 2 years ago on the same week. So definitely down. Looking at the 4-week average, sold units have really remained up relative to last year. And if you think about it, we've been selling the things that went under contract before the stay-at-home order, so that's not a huge surprise. but that's starting to drop off now as we look at these 4-week averages. This is the first 4-week period for the year that we didn't do as well as the year prior. So up to where we were putting the things into contract in order to sell them at a better rate than where we were. We're through that time now. Our listings, of course, dropped off immediately because that's a more real-time indicator. We did have an inventory of sales to go through, so that explains what's going on there. Listings were cruising up like they do every year in the springtime, although usually they go all the way through the summer before they start to drop. In this case, they dropped as soon as our world changed. And the sales, again, hung tough for a while, but looks like they're rounding out and are probably about to start dropping off a little bit. So that is listing and sales. We'll just go right to the 4-week average on this. We've got terminations and price reductions. So as we talked about before, start with price reductions, this blue. It's a big number. So we've got some sellers being a bit aggressive in reducing the prices of the homes in order to entice folks to take a look, whether that's virtually or in person, to try to move that inventory. And we're up at a rate as high as we've been, higher than we were at all in 2018. And in 2019, we're kind of at the peak of where we were, which doesn't typically happen until we get well into the summer before the prices start getting reduced to make sure that we get that house sold before the school year starts. So this is an abnormal number for sure. And on the terminations, again, for this time of year, terminations are usually down in here and we're up in here. So percentage-wise, for the last 5 weeks or so, we've been above last year's curve on the terminations. And again, no surprise there. We've already looked at listings and sales and terminations. This is just another way to look at it, where we've got anything that's increasing inventory above the line, and if it's decreasing inventory, it's below the line, and looking at how those move together to create the change, the net change on inventory. So this is week by week. This is the 4-week average. Obviously, our listings are down. We've already talked about that. Our sales are down slightly. We know our terminations are up. So the net effect of that is a typical year, we're going to add inventory the first part of the year and then reduce it the second part, add, reduce. We started out reducing, which is not atypical in the first part of the year. And then we started to increase, and then this all hit, and now we've been reducing inventory since then. So we're selling normally, listing less, and terminating more. If we look at our actual inventory, this is 2018, 2019. Here's the inventory as it sits today. And the color codes are, what status they're in today. So if you look at today's inventory, you've got this blue down here, which is the active inventory. We got 1,000, just over 1,000 in active. And then you got under contract and pending are these, the purple and gray. So if you add those up, we're just under 1,000. So it's about half and half, what's under contract and what's active out there. And then looking at the prior years, this was the inventory that we had at this point in time, the 18th week of 2019. The black bar is what sold eventually, orange is what terminated eventually, and green is what expired eventually. So that's how you look at this one. It spans the entire sheet here. Then we've got absorption and months of inventory, same information, just inverted. So depending on how you like to look at it, we're currently absorbing on average about 31% of our available inventory. So we're selling 31% of our available inventory in a given period of time. That's pretty normal. We were at 27% last year at this time. We were over 30%, slightly higher than we are today in 2018. So this looks fairly normal, which means that the balance hasn't really changed from buyer's market to seller's market. Things are pretty much as usual because the inventory is not moving. It's staying pretty constant. It's lower than it was before, but we don't have any forces that are affecting necessarily absorption and inventory. So as an effect, the inventory is about where it has been in the threes, low threes at this time of year. And all things look normal there. Okay, so here's the good news. When we look at what went under contract this last week, 195 transactions or 195 listings went under contract, which is that bar right there. So it's 3% off of where we were a year ago. But if you look across here, where we were a year ago is that black line right there, which goes above the 200. And that is the highest week of listings going under contract over this 2+ year period of time. So while we're 3% off of where we were a year ago, if you follow this all the way back, you go back to sometime in July of 2019 was the last time that we had a better week of transactions going under contract. So we had some pent-up demand. So folks were sitting on the sideline waiting, and this to me is a really good indicator that we've got some good things to come here. And it's a little bit easier to see it down here when you look at the 4-week averages. Typically this time of year, you're putting things under contract, they're going up until you get to the end of summer, and then you end up selling, a little bit later, you close the sales that went under contract, and then you end up with more closed sales than what goes under contract for the second part of the year. Well, we started off this year looking pretty normal, and then the listings going under contract just dropped off significantly, as you can see right here. And then now they're going to pick back up, based on this huge week that we had right here. So that week will be in this 4-week average for the next 4 weeks. So you can see that people were sitting on the sidelines, but it looks like there's some confidence out there to go ahead and put a contract or put a deal in contract and know that the lending is going to be there and that it'll be able to go through to close. So that's pretty exciting. You can see it here when you're looking at relative to last year. We've been selling more than last year for the most part up until this week. And now we're selling less than last year for that 4-week average. Since the COVID-19 thing hit, we've been putting way less under contract, up to 30% less in this little span right here, but that's creeping back to normal. So great news that we're starting to put some deals in contract. We're gonna have a few weeks of lower than average sales closing because we didn't put them in contract during these weeks. And then finally, we want to look at how long it's taking to get a listing under contract and then how long it takes to get it closed. So in the wintertime, that's usually right around 100 days. That's what this line is right up here. And this time of year, we're usually right around 80 days, which is what we're at. So for the last 4 weeks, we've averaged 38 days to get it from listing to contract, and it was 39 the year before. And to go from contract to close, 41 days versus 37 the year before. So things are looking normal here as far as the process goes. You put a listing in, it's going to close basically 80 days later on average, and that'll take half the time to get it into contract and the other half of the time to get it through escrow. This is just basically showing you what goes into contract versus what gets sold. So beginning of the year, more in contract. It just shows it as a percentage, and then more sold than under contract, and vice versa. And median sales look like you would expect them to. Again, no real pressure on pricing right now other than the price reductions that have been happening. So it's possible that we're going to start seeing median prices drop based on sellers and listing brokers making that move to get those prices reduced. But we averaged 315, which is 6% more than we were a year ago. Things look normal here. And then sales price, this is final sales price as a percentage of the original list price. Again, that looks normal. It's a little bit better than it was a year ago at 99.6%, a little bit lower than it was in 2018 at this time. And you'd also expect this to tail off going forward because of those price reductions. So if you're reducing the price off the bat from the original list price, you're going to see this go down. It's not because the offers are coming in a lowball fashion. It's just because we've got some aggressive sellers just reducing the prices of their listings. So that's it in a nutshell. Pretty excited about this week's numbers. Listings that went under contract, to me, that's something that we can all be talking about and giving people some confidence out there. So thanks for watching. And this is a report that we have in PDF form that AmeriTitle puts together. If you'd like to get a copy of it, we can get you on a distribution list. You can talk to a business development rep or myself, and we can get this out there. The plan would be to put this together every week as we go through this time until things stabilize and we're feeling normal about it. So thanks for watching, and see you soon.